you came back from New York in the 56, I think
56.
it was, having studied and worked with Ben Graham, what was the dream? What was the ambition?
Well, it was kind of disgustingly low. I didn't know what I was going to do. I had about $150,000 at that time, and I felt, if I earned 10% on that, that'd be $15,000 a year, and I could live big on that at the time. I was interested in reading and taking courses at the university. I took my father-in-law's course in psychology, and I thought I might go to law school. I knew there were a whole bunch of subjects I wanted to read about. And then I sort of stumbled into this partnership a few months later because 7 members of the family said, we want you to handle our investments. And I didn't want to do it one at a time or tell them what I was doing. So I put the 7 together in a partnership that had $105,100 in it. You can guess who the $100 was.
Yes, I know.
and I thought that was it. And a few months later, a fellow named Homer Dodge, who had been a stockholder of Graham Newman, came out, saw me in Omaha, and he said Graham Newman was liquidating, and he said he'd asked Ben where to put his money, and Ben said maybe Warren would be a good choice. So he joined me for, I think, about $100,000 at the time. And then 4 months later, some fellow in Omaha that read the legal notice, actually, a friend of mine called me up and said, what are you doing? And I told him, and he did it. So yeah, I just kind of stumbled along.
You kind of stumble along.
Yeah.
All of a sudden, you have a partnership,
right,
and you're making money.
And I couldn't sell Keo now, understand? But the partnership did well, and part of the partnership was buying what looked like cheap stocks. Berkshire Hathaway looked like a cheap stock. It was a terrible business.
What was your ambition then? Now you have a vehicle.
Yeah. Well, I started out by thinking I was a textile expert, but I was disabused of that notion fairly fast. I really did. I thought, what do these guys know about making textiles? They've only been doing it a few hundred years. I mean, the Egyptians, I think, figured out how to weave.
But I've been in Omaha for a while.
That's right.
I know a lot about textiles.
Just turn me loose in the plant and see what happens. So anyway, what happened was right at that period, the textile business was good for a very short period of time. And so I was like a duck floating on a pond when it was raining. I was going up in the world, but I thought it was because I was flapping my wings, but it was that damn rain that was coming down. And then when it quit raining, I found out, what do I know? Right. Yeah. And then we went into other businesses.
Yeah. And so all of a sudden, was it, you went into other businesses, meaning you had some cash flow coming in?
We had some cash, not very much,
yeah.
But we had some cash around. And when Jack Ringwalt decided to sell his insurance companies in early '67, we paid $8.7 million, I think, $8.4 million, I guess it was, $8.4 million. And we had, in Berkshire, we had, I don't know, maybe $4 or $5 million around. Maybe we borrowed a few million. But
so that was your first entry into the insurance business. Why was the insurance business attractive?
Well, it does control money, and if you've got somebody that's doing a decent job on the insurance end in underwriting, it gives you money to invest on my end.
How much of your revenue comes from the insurance business?
Well, a lot comes from insurance, and then we have a lot of money that's generated by insurance. Right. So insurance has propelled our growth. There's no question about that.
Because it gave you money to
It gave us money to both invest in marketable securities and also money to buy businesses outright.
And then in 1965, you have a chance to take over.
Right.
Berkshire. What happened?
After a while, I realized what a lousy business I was in. And we didn't get out of the textile business, but I decided that to the extent we could, we'd try to add on other things. Interestingly enough, Charlie, I'd have been better off if I'd done all the subsequent things without putting them in Berkshire originally. I mean, if you just talk financially, Berkshire, the textile business was a drag for 20 years. So if instead of buying these things for Berkshire, we just bought them in a separate entity,
Then why didn't you do that?
I don't know. But it worked out fine. But I don't know.
But everything worked out. But yeah. I mean, if you look back.
Looking back, it was a big, fundamental, wrong decision from a financial standpoint.
To get involved in the textile business at all.
Yeah. I should have just gotten out of that and gone on and done these other things.
But tell me why you didn't.
I kind of stick with things.
It's that.
Yeah, I really do. I mean, it's just my personality. I mean, I'm driving a car after 8 years. I'm living in the same house after 47 years.
Your net worth about that time was about $6 or $7 million.
That probably is about right. Yeah, that's probably about right. Because in 1962, when I formed when I put all the partnerships together, it was about $1 million, and when I wound up, it was about 25. And so it probably was.
What are you thinking? I mean, I'm just going to continue finding investments that I can make, and everything will turn out all right.
During the mid-'60s, I was running this partnership, so I thought I was going to keep running the partnership. And then I got to where I didn't think I could do that well. And
why did you think that?
Well, the market in '69.
Oh, the stock market.
The stock market just went crazy, and it was a little like, in 1999 and 2000. I mean, I was left behind, and I didn't want to do things I didn't understand and that didn't make sense to me. But I also didn't like sitting there while everybody else was, running rings around me, and my partners were probably not saying it, but they might think, has this guy lost it? So I gave them all the money back, and I gave them the shares at Berkshire, and got a lot of them myself as part of that. And then I just kind of got more involved in Berkshire. It became my painting. I was only painting an hour or two a day at the start, and then I started painting like crazy.
So you had a stake in Berkshire.
Right, and I actually bought more, but I just decided I'd put all my money in Berkshire and ride with it.
And ride with Berkshire as a vehicle,
as a kind of an extension, a corporate extension of me.
Yeah. And are you out of the textile business by then?
We got out of it. No, we did not get out of the textile business for 20 years. I even bought another textile company. I mean, this is, I'm going to confess. This is like a revival meeting now. I'm going to just go up to you and
we need that.
Forgive me, will you? Because I bought another textile company. I bought something called Wambeck Mills in Manchester, New Hampshire.
Why did you do that?
Only my psychiatrist knows. I thought I was going to solve something by doing it. I mean, I
solve something?
Well, I mean, I thought that these two put together would do better. Some crazy thing. I mean, I did it myself too. No management consultant told me to do it. So it was about 85. I mean, 20 years later, before we got out of
the textile business.
So I said it's a little bit like watching a parade with all these other textile companies, and you stand up on your tiptoes, and then everybody else stands up on their tiptoes too. And all that, you don't see any better, and your legs hurt. And that's what happened with textiles.
In 1973, which may be your first run at the Washington Post, you began to buy shares.
Yeah.
How did you come to the conclusion?
I'd looked at the prospectus in 1971 when Charlie and I first met Kay Graham one time, and they were going public right at the time of the Pentagon Papers. And then in 1973, the stock got very cheap because their television licenses were under challenge by Bibi Rebozo, Nixon's friend, and the stock went from, I think, like 38 to 16 or so in a very short period of time. And when it got down to around 20, just in a few blocks, we bought almost 10% of the company, and that now is about 18% because they've repurchased shares. When it got to about 20, that meant the whole Washington Post company, it had 4,800,000 shares. The whole Washington Post company was selling for $100 million. Now they owned the Washington Post, they owned Newsweek, they owned 4 big network television stations, including CBS in Washington, D.C. and all of that.
Jacksonville, Florida.
I mean, everything, and they didn't owe any money. And if you had taken those separate parts, you literally could have been out in the middle of the Atlantic Ocean, at midnight in a rowboat, and you could have sold them for $500 million. People have been swimming out in shark-infested waters if necessary.
And you could have had all of it for $100 million at that time.
For $100 million. I mean, you weren't going to get all of it.
Here's what I don't understand. How come 95 people didn't see that?
It was amazing. We were buying it from big institutional investors, and they were bailing out of it. And if you'd asked any one of them what the pieces were worth, they would have said something close to what I would say. But they thought the stock was going to go down. So what? And the stock did go down. In fact, after we bought it, it went down a little more.
So what? Warren Buffett believes that I'm not looking at the price of the stock, I'm looking at the value of the business.
I'm looking at the properties, and I'm looking at the Graham family. I mean, that stock we paid about $10 million for is probably worth $1.5 billion or more today.
And they haven't $10 million and it's worth $1.5 billion.
And they have not struck oil. They have not invented a cure for cancer. They've just taken those properties and kept doing reasonably intelligent things, and sometimes very intelligent things, with the money generated by it, and they've developed the properties they've had, and they've been terrific stewards of the money. But there's no miracles involved.